Good morning. Hi, everyone. I'm Amit Verma, listings manager at the ASX, and I've been there about a year and a half. Quick background. Before this, I used to work for a small investment banking unit that operated inside the New Zealand government. It's a very unique sort of role. We also had a large LP fund who invested in a bunch of VCs. And so I've been sort of doing this activity for the past 10 odd years in the Australian tech ecosystem. I'm also part of the A3 Ventures Explorer Syndicate, which looks at early stage companies. I also mentor companies at the Founder Institute, which is one of the world's largest tech accelerators. And I've also done a bunch of stuff with coaching at StartMate, which is Blackbird's accelerator. So yeah, so quite experienced in the tech space. I'm very lucky actually to see companies like really, really early pre-seed right up to companies that are about to list. And so my role at the ASX essentially is working and finding the right types of companies to list on the ASX at the right time. And the key markets for us, of course, Australia is the biggest market for us, but we have second biggest market is New Zealand, followed by the US and Singapore. So we're often in those markets. In fact, I've just got back from the US meeting with a number of companies and investors and some great intel on sort of what the market's doing. Can I just have a quick read of the room here? How many of you are sort of founders or running businesses? Perfect. And investors in the room? Nice. And how many of you feel that the public markets is quite disconnected from the private markets? Interesting, because I think it's intimately connected. What happens in the public markets affects all of you at some point in private world as well. Yes, there may be a lag. There may be impacts may be different in terms of size and sector, but a healthy public market is critically important to the success in private markets as well. Because at the end of the day, the companies, as they grow larger, guess who they're being compared to? They're being compared to their public market comps. And so that flows back down the value chain right into the early stage as well. It just takes a bit longer. So let me just give you a bit of, where's the, here we go. Which button am I supposed to be pressing? This middle green one? Yep. There we go. So this is a busy slide, but it's interesting from what's been happening in the public markets. So of course, 2021 was a record year for all of us globally. ASX, we had 241 listings, highest ever, and then $52 billion, which is an all-time record. And then a significant slowdown in 22 where we had 107 listings. And then 23, I think we'll finish the year at about 45 to 50. But there are some green shoots. We've seen some significant listings over the past few months. Oh, thank you. Okay. We've seen some really good listings over the last few months, a few names over there. Light & Wonder from the US, about 8 billion. Abacus at 1.8, Freightways from New Zealand, 1.4. But these businesses are traditional businesses, large, off-scale, and profitable. So the market is not yet ready for unprofitable technology businesses like they were in 21 and 20. And so I think what the feedback we're getting is that second half of 24 is when the market sort of will reopen for the majority of businesses. What we do know is there is a massive pent-up demand in the system, both here and offshore. Investors want liquidity, founders and companies want liquidity, everyone wants liquidity. And we saw 3 companies list in the US about 2-3 months ago, Klaviyo and Instacluster. Instacart. Their IPOs didn't go too well because they were fundamentally structured incorrectly with extremely low free floats. But overall, generally, there is a huge demand. The big super funds in Australia are constantly telling us, please find us large opportunities of scale to invest in outside of the traditional mining and banking and financial services. So as a business, we are focused on growing the pie within sort of technology and healthcare. That's one of our primary mandates. This is quite interesting because it goes to the heart of what's happening in the market. This is known as the ASX 200 VIX. Anyone familiar with the volatility index? So what essentially it talks about is it's tracking the next 30 days of expected volatility. The yellow line is the ASX VIX. The light blue line is the US VIX. And this is all run by S&P as well. So what we see is that when the ASX VIX is in that pink band between the 2 red lines, so between 10 and 15, that's where we see the bulk of the IPO capital raised. And this is the same in the US as well. Their lower threshold is slightly higher at 20. Ours is 15. And we've seen the VIX sit in that 10 to 15 band for a few months now. Yes, there were a few blips when SVB and Credit Suisse had the problems earlier in the year, but that's pretty much, the market's factored all that in. And we're in this period of incredible stability right now where essentially we're just waiting for the markets to reopen, and hopefully the VIX behaves itself and we see this period continue where you should see a bunch of IPOs coming on. This is one area that the ASX really excels in. It's follow-on capital raising. Now, whilst the private markets has been a bit slow in follow-on raising, that is just raising again and again, the ASX does it really well. We're the #1 exchange in the world for follow-on raises. We did over 1,000 transactions last year, and this year also we're sitting at #1. The #2, I think, is NASDAQ by about half the number of transactions that we do. So as a listed company, it's very easy to come back to market and raise money again. WiseTech has done this beautifully over the past few years. They've gone from a $1 billion company at listing to 25 odd billion now, acquired about 30 companies along the way, and kept coming back to the public markets to raise money to do that. So it's a super efficient way of doing it. Our US peers get extremely surprised to know that we can literally do a follow-on raise in a couple of days, no dramas, as long as it's under 15%, there's no shareholder approval required. Our continuous disclosure regime makes it very easy to go back to market and raise money from investors. You can see some really significant follow-on transaction in 23. Star raised 1.4, 1.3. Car sales stands out as raising 1.2 last year, and then again 500 million odd this year. So you can see the markets do support follow-on raises. So from your perspective, when can you really IPO? We don't like companies listing too early. Unless you're in the mining space, it's okay to list a company early there. Ideally, if you're a technology business or a healthcare business, we want you to be of a scale where at least institutional investors would be attracted. And most institutional investors have their floor lower benchmark at sitting about 100 million. They don't look below that. So ideally, we advise companies, when they're getting to the 200 million plus mark, that's maybe a time to start thinking about, yes, we want to continue raising money. Do we do it privately or can we do it as a listed business? And, we're always here to have a chat with anyone who's thinking about those lines. And, we can take you through the details. A quick snapshot on the ASX. Like I said, we are a top 10 exchange in the world. We do about 130 new listings annually. This is a 5-year rolling average. Quite a strong, robust regulatory environment, not as intense as the States. As a rule of thumb, listing a company on the ASX as opposed to the US, about half the cost and half the complexity. We've got about over 2,000 companies listed on the exchange for a total market cap of around nearly $3 trillion right now. And we got about 8 billion of equities traded daily. The next number is really important. We have the 5th largest pension pool in the world. All of you and me including have got our money sitting in super. That's really driving it because this is a very large pool of money. It's the only Western market which has a situation where the pool of money available is more than the asset base available. Every other market is the reverse. So we see this demand and this craving from our big insto investors to invest in quality assets, publicly listed assets, because they have to maintain those asset allocations. Like I said before, we are quite active. Last year we were on par with TSX. Although TSX does list their ETFs as well. We talk about new listings. We don't do SPACs with good reason, as many of you would have seen what happened with the SPACs in the past couple of years. And yeah, as I mentioned over there, Singapore and New Zealand are important markets for us. You can see why they don't list much at all. I've talked about follow-on raising, so I won't go into that in detail. Just to note that the ASX is #1 in the world for follow-on raises. This is quite important when we talk to companies. It relates to getting early access to indices. So as an example, in the US, the flagship index is the S&P 500. To get into the S&P 500, you've got to be nearly $15 billion in market cap. To access the ASX 200 or the ASX All Tech or the ASX 300, it's a much lower figure, ranging from 200 million to about 600 million. So what this does is once you get into the S&P ASX indexes, then the institutional investors almost have to buy you because they're running ETFs based on those indexes. So it's almost a good way to access liquidity. And then another benefit is that you still get a large amount of North American money because about 25% of the funds invested into ASX companies comes from North America. I see I've got a very short amount of time. I might touch on this as the last slide. This essentially talks about that arbitrage between the US and Australia. So people often ask us, why would a US company list here? And that's the reason why. So if you're not in the S&P 500 where you're getting an EV to forward sales multiple of nearly 6, you're in the red boxes there. your EV to forward sales multiples drop to 1 and 1.6. If you're on the ASX, which is the top blue ones, they're getting 4.5 to 5 times EV to forward sales multiples. And the average company size on the ASX in those indexes is sort of, $2 to $3 billion, which is equivalent to a US small to mid cap. So the point here is we're not going to the US and chasing large companies. We're chasing companies ranging from about 500 million to 5 billion, which are far away from getting into the S&P 500, but we do really well on the ASX. And this is the same story we're telling to our Australian unicorns who may be thinking of going to the US at a valuation of maybe 1 to 2 billion. They might think they're good enough to go there, but the market reality is that they're still way too small for a US listing. And that's finally the listing process. I'm going to leave it at that. My time's up, but please, I'm going to be here for a few more minutes. Please join me. If you have any questions, reach out to me on LinkedIn. I'm fairly accessible. Would love to have a chat with you guys. Thank you. Cheers.